Welcome everyone to the Venture Capital session. Today we have a very interesting panel touching on basically the intersection between everything venture capital and automotive, but not only that. So we're going to explore like a few different topics, how exactly the different structure in VC work, and we have three great examples, I think. From slightly different perspective, I would say. So we have like corporate venture units, strictly VC firm, and then a hybrid sort of that we're going to discuss at the end, and then I'll let give more details. So let's start with Paola Antonella Garzonio, principal of Stellantis Ventures. What I would like to go deeper about is essentially talking about the mission and the reason why you guys decided to start with a corporate venture capital arm. And then maybe we can delve into how exactly the operation work and inside the whole organization. Yeah.
Absolutely. Thank you, Giacomo. And thank you for inviting me here. I'm very happy and glad when there is such events, because it's an opportunity to share our experience and best practices, and also to listen to other experiences and best practices. So thank you. So just leave me, I would say, to explain a bit and to spend 1 minute about Stellantis in case you missed the intro speech yesterday from Daniele Chiari, because it's important. So Stellantis is a very big automotive player, but also a young company, because we were born in 2021 from the merge of the two historical companies, FCA and PSA. And we are, of course, a global players with 14 iconic brands covering different segments, global players with industrial operations in more than 30 countries, commercial operations in more than 130 countries, excellent results. Last year, net revenues was 189 billion dollars in terms of net revenues, and 6.2 million of consolidated shipment vehicles globally. It's important to say that Stellantis Ventures is the CVC, the corporate venture capital of Stellantis. We were born and announced in March 2022 by our CEO, Carlos Tavares, as part and in support to the strategic plan of Stellantis, the Dev Forward 2030, that paved the way for Stellantis to become a tech company, to achieve results in terms of net zero by 2038, and to be best in class in value creation for our stakeholders. And Stellantis Ventures is supporting this strategy and these pillars. We are then a strategic CVC, investing in minority stakes in startups that are in line with our tech roadmaps, and more than that, are judged strategic for the group. So as you can imagine, we are not just measured in terms of financial KPIs, but also in terms of application rate of the technologies of our portfolios companies. So this is very concrete and very, very important. We already invested in 14 companies. When we were born, we had the availability of 300 million euros to invest. 14 companies in very different areas, in new features for our customers, services, deep tech proposals. Now, more and more, we are focusing on fewer areas, aligned, of course, with the strategic area of interest of Stellantis. So I would mention, first of all, electrification, both in terms of battery and new chemistries of batteries, and also in terms of components and systems for e-motors. Then ADAS and autonomous driving, and also new and affordable concept for mobility. Very important, the area of green and decarbonized energy and carbon removal. And also, last but not least, the Industry 4.0 area that we are adding this year as main focus area. These are the main vertical and focus areas for us. We are a global team. We are based both in the United States and in Europe. in France and in Italy. And also we have a global interest and footprint in the sense that we invested so far in startups based in United States and Europe, France and UK, but we have no limitations, no constraints, so we would be glad also to invest in startups in other countries and also in Italy. We are currently looking at some interesting opportunities in this sense. And in terms of maturity, we invested in startups coming from early stage up to later stage, like Series C and even Series D. So we are stage agnostic, but we are more and more focusing, I would say, on mature technology in order to accelerate the path for application. Even though we are always, I would say, very, very open to consider early stage startups, especially if they are proposing disruptive technology that could be a game changer for Stellantis. I would also like to mention how we work inside Stellantis, because this is important, especially speaking about us, about corporate venture capital, because we are fully integrated into the Stellantis organization. We are part of the tech organization under the leadership of Ned Kuric, the CTO and Chief Engineering Officer of Stellantis. And we are within a strategic partnership organization. So first of all, we work absolutely in synergy with the tech organization. And as I mentioned before, we have a network of subject matter experts in the tech organization that support us and I would say deliver not just a tech assessment. For us, it's not just sufficient to understand if the technology is interesting, but also to build, I would say, a concrete plan of application of these technologies in Stellantis. And in fact, we often and more we sign in parallel a term sheet for investment and also a joint development agreements, or in any case, we, I would say, concretely start discussing about a partnership with these startups. And also we have a large internal network, including other business units, depending also on the topic we are talking about. So I would mention SoftwareX, manufacturing, ICT, and we work also in synergy with other departments like business development and purchasing. So this is very important to me because it brings value both to us, because of course, as you can imagine, this, I would say, validate somehow the assessment of the interest in startups, and also accelerate at the end of the day the application of these technologies once we invest, but also to the startup themselves, because at the end of the day, what we bring to startups, it's not just the financial, I would say, resources, but also our network, both internal, with internal mentorship, and also possibly the availability of our assets, laboratories, etc., but also the external network, talking about tier one, partners, JV. And so I think this is really a great value for both.
Great, thank you. Thank you so much, Paola. All right, let's shift a little bit the focus on a more, I would say, a different, less corporate structure with United Venture, Damiano Colletti, principal of United Venture. So give us a perspective from like a more pure, I would say, like a VC standpoint, and how exactly you guys like interact with companies, in particular in the automotive industry.
Sure. So thank you very much for having us. United Ventures is the largest independent institutional venture capital firm in Italy. We have $500 million of assets under management, and we across 40 portfolio companies. We typically invest at what I would call early stage and early growth. So where we write tickets between 1 to 10 million as an entry ticket, more or less, depending on the stage of the company. And in terms of investment thesis, we have two main pillars. One is people, and the other is technology. The people, the best founders and entrepreneurs typically are a little bit insane because they think that they can change the world, and because they have the experience in that given field or industry, and they know that they can change it, and they really fight to make that happen. And so that's one of the X factors that we look for in the founders. And then from a technology point of view, we really look at, much like Stellantis, mature technologies which have had some sort of validation or traction on the market, and that can really unlock exponential value in those industries per se. We are not specifically focused on one technology, but we look at technologies that can have an impact in specific industries. Electrification is a case that we all share. We have a joint portfolio company with Stellantis and Lifti called Electra Vehicles, which is also here at the event. In particular, they are able to increase the state of health and state of charge in a battery by up to 30%, and in some cases also predict failure. So these are for this specific industry, and obviously I leave it to my esteemed colleague to comment on that further, but these are things which really resonate with us when we're looking at specific examples. So that brings us to electrification and to mobility. We have another example which could be cybersecurity. So we have a embedded cybersecurity company called Exane, which makes it possible to protect at a firmware level devices. And as cars and vehicles become more and more connected, the threats to those vehicles and to these elements is more and more pervasive. So these are the kinds of sectors that we look to focus on. So yeah, from that point of view, we try and balance that. And then our role is typically that of we take a lead in the investment. We take a board seat and try and help these founders also navigating the relationship with the different stakeholders, whether that be their own investors from previous rounds, or as well as helping them in their go-to-market, making introductions through our network, and helping them expand their business. Yeah, that brings us to today.
Awesome. Thank you, Damiano. Appreciate it. So, Alessandra Scotti, Institutional Relations and Scouting Manager of Lifti. So let's talk about Lifti a little bit because it's a very interesting model, very unique, I would say, in Italy. Pretty young as well, but extremely active. So tell us more about that, and what is the relationship also with the automotive industry?
Yeah, okay. Well, thank you. Well, first of all, thank you for inviting me, and I'm especially happy to be here today because actually this event is been organized by Centro-Estero, who's been the source of two of our startups, which are in the automotive sectors, and one of them is actually electric vehicles. So thanks to them for that as well. So the collaboration in the ecosystem in Piedmont clearly works very well. So who we are? Yes, we are probably not as young as Stellantis CBC. We're slightly more of a toddler, but still very, very young. We started operating in mid-2020. And the idea really stemmed from two great minds, if I may say. Francesco Profumo, who most of you know, he's been president of Compagnia di San Paolo. He's always had a great interest and passion in technology transfer, and he met with Stefano Buono, who's our chairman, who he himself is a scientist who managed to become an extremely successful businessman. And so what they wanted to do was really to bring great ideas, great technological breakthroughs to the market, which is something which is really hard to do, takes a huge amount of time, lots of obstacles, difficulties, etc., etc. So they thought, how can we do that? So the first thing so that's why we we are quite different from most funds, etc. But because that's where we come from, and so they thought, okay, first thing is it takes a long time for the projects we want to invest in, breakthrough technologies, to get on the market. And typically, regulated funds have an investment and divestment period, so they have to leave the startup despite not being willing to, but they have to divest. And so that might be a problem. So the first thing is we're not a fund and we are a holding company, meaning that we have patient capital so that we can stay with the startup for as long as needed. And the other idea was very often, the stages of development are very different and have very different needs. We start investing from pre-seed, proof of concept, very early on, so the need is very much technological development, up to the market and starting to scale up, Series A. So the needs are very different. And so we have a team. We are quite a large team, but the largest group is the project management team. There's 8 of them. And they really have a hands-on approach so that they can really walk with a startup in our portfolio with a hands-on approach. And it goes from IP strategies. Very often, actually, we've seen lately, it's recruitment. Sometimes they know they might need a manager or a sales director, but they don't know how to recruit it, how to select them, or they don't have the network. So we come in and help out, or technological development as well. So this is, and we are structured internally as well in a very, as an industry possibly with business units, so following the process within our portfolio. So from me, scouting, and then there's the selection process, and then project management, and now we have an exit team, M&A and exit team. And actually being a normal corporate, so to speak, not a fund, gives us also the flexibility to adapt to the needs. Because we invest in every sector of the market, so we don't have no verticals, we have to be very flexible and able to adapt our investments to the pharmaceutical field, automotive, photonics, quantum. It's all so different. We have to have the ability to adapt. And as I mentioned, so we start investing from a very early stage, so pre-seed. And sometimes we've had companies that weren't even incorporated when we met them. And we invest all over globally. We mostly Italy and Europe, but we have a couple, more than a couple investments in the rest of the world now. And also it's very much because of the type of technologies we invest in, we have to have a global perspective. It's a bit what Paolo was saying earlier. We, specifically for the automotive, actually, I was talking earlier with some colleagues, and it often happens that sometimes we see startups that have nothing to do with the mobility sector, and we think, hold on a minute, because there are people who worked in that sector. Hold on a minute, okay, we are talking about medtech here, but actually we could use that in the, I don't know, in the welding process or something. And they're like, oh, really? Okay, let's have a look. And then actually it is a possible application. So there's some contamination as well. But mostly what we look at in the mobility sector is as basically the main trends that Paolo was mentioning. So connectivity, and so all that is data management and communication, vehicle to infrastructures and vehicle to vehicles, and cybersecurity. So we have a startup as well in cybersecurity, which is DriveSec, which is one of the startups that's been introduced by Centro. And they actually have, so we need to get them to meet Exane, a penetration testing system.
Okay. Good.
So I know they're very good. I know what the what the CEO used to do. So they're very good. So it might be good to test them together. And then the other sector, of course, is decarbonization and circular economy as well. So looking at electrification, and so there's electric vehicles, but also the life cycle of the car, the vehicle, and its components. And in this respect, for example, we have rubber conversion. which is a startup, but that has a technology whereby 30% of the tire can be made by devulcanized tires. So it's compared to the competitors, they have incredible metrics, incredible results. And in the sector of autonomous driving, autonomous vehicle, and or going closer to that, so assisted driving, we also have another startup actually in common with Stellantis. We very recently announced this very week, which is Steerlight. And they do a LiDAR solution, helping with autonomous driving and assisted driving. And another startup, which is called Easy Rain, and again, it helps with the managing the aquaplanning, but it also has a software part which helps with for loss of grip, so it alerts in case of loss of grip. So I think this is more or less overall what we do and how we operate in this sector.
Thank you, Luciana. Perfect. So I would love to actually go deeper on the common portfolio company to see exactly what exactly convinced you guys in moving on with the different investment. But I'm not going to ask that because I don't want to pick on a particular one. So let me oversimplify a little bit and ask you guys. What are the early signals that you guys look into when evaluating a company that might actually have some potential for your portfolio? So I know it's an unfair question because there are a million of variables there. There's a huge checklist going on, but I'm curious if you had to list a couple of those, like good signal that can tell you something meaningful of potential in companies. So from the founder perspective. So the founder in the audience can be like, maybe I'm one of those people, I want to talk with these guys. Yeah, please.
So I would say that for us, as I mentioned before, it's fundamental to understand the interest inside the company. So this is for us really a go, no go. So it's the first point. So we are looking for disruptive technology in line with our tech roadmap, or also possibly new, I would say, input for our tech roadmaps, but we need to have the commitment from our tech community. Besides that, of course, I would like to mention the human factor. It seems obvious, but I mean, it's very, very important. So there are some calls that I can remember with startups, first calls, intro calls, in which, I don't know, the approach is not the right one, but not from a technical point of view, but from a human relationship point of view. And this is so, I would say, basics. So the evaluation or the feeling with the CEO, with the whole team is fundamental because it let us understand what can happen in the future and if the startup would have the possibility to really scale.
Work with you in a very productive way.
Absolutely.
That's a major point. Awesome. Thank you. Damiano.
Yeah, so I agree, as I said, the people, and I totally agree with Paola, that the psychological factor is important. We had seen Electra before they came to us for their seed round, before we ended up leading their next round, and we gave him very specific feedback. We found the technology compelling, and we said, come back once you have some traction, and he did exactly that. He showed that very, very, very clearly, and I think it's to put it into a context of Electra's product and Electra's founder. Their key product is an adaptive digital twin, so it adapts to the exogenous and the endogenous factors that are key to the battery. And to that respect, I found that the founder was able to adapt, and resilience in when you don't get that contract, maybe it's late, the ability to adapt and quickly internalize learnings and reapply those is really, I'd say, for me, one of the most important things.
Thank you so much. Alessandra.
Well, I can't but agree with everyone else. The team is an essential part of it all. I have to say that, especially, I suppose, I am the one who goes out on the lookout for startups, and very often I'm in the world of research, and So possibly I am more used to having less skilled teams or less used to presenting and to face and possibly understand and talk like an investor and understand the language. But that is an essential part, and very much the feeling, the mutual, because you have to work together once they are in your portfolio, and you are in the same company, you are shareholders, the whole lot of you, and so it has to work. So that it's something that I often say, make sure that, and for us, of course, what is really important, we're very, very focused on the technological advantage and on the technology itself. And I've often seen that actually it's not always so easy to work out the competitive advantage. And sometimes startups highlight something that it's not their real technological, their real competitive advantage. They think it's something, and actually then you talk to them, and possibly because they think it's too technical, I don't know quite why, but they don't really highlight the right thing. And so that's something, I work a lot with incubator and accelerators, etc. as well, and I'd say do a lot of mock pitching and get people, try it. And so you are more sure of yourself, and also you understand what you really have to point out and say.
Awesome. Yeah, very practical, very, very useful, and definitely countering whatever probably is happening in other panels where everybody is hyper technical. Now we're back to the soft skills of like human interaction and empathy. So that's awesome. So we still have a few minutes. Quick take, maybe just really, really quick, whatever you can disclose on what is next for you guys, for the fund, for the in terms of project, in terms of vertical you guys are seeing, whatever you can disclose, like really quick, 30 seconds.
What I would like to mention is the big area of carbon removal, because in there, the attention is increasing more and more, and we have this target that incredibly, I would say, hard to reach, to get net zero by 2038. So for sure, we have a lot of focus on these areas, and I can mention in particular one of the last investment in this sense, that is net zero. Just to explain that this goes even beyond the mobility sector. So we are an automotive company, an OEM, but in this case we invested in something that is outside mobility. Net Zero is a French company with operation in South America that basically is removing in a stable way carbon from the atmosphere thanks to their pyrolysis technology and process, and it's basically transforming the agricultural waste on biochar. It's like magic, because this is a virtuous loop, and you can use this biochar in order to make agriculture more sustainable and to partially avoid the chemical fertilizer. So to me, this is a perfect example also of a startup in which we invested, and we have to invest more and more in order really to achieve our goals.
Thank you, Damiano.
That sounds very interesting. So from our point of view, we have two active funds. We are actively investing. So if you're looking to raise a Series A or a Series B round, please do not hesitate to contact us. On another note, we're also fundraising. So we did the first close of our fourth fund in June. Thank you. And we're targeting a final close of 150 million. In Q3 of this year. So if there's any investors out there, I'll gladly take your number. So yeah, thank you.
Perfect.
Well, actually, I was going to say, we're looking forward to celebrating our 50th startup in portfolios. We have 49, very annoying, and officially announced. But I think in 3.5 years, it's quite a good achievement. So, we already have it ready, but as Damiano was saying, we're very happy to look for our next investment. And actually, yes, I think deep down in my heart, I would like to see a lot of contamination between technologies and being able to bring in the automotive sectors what we are seeing in other fields. It's something I think it's possibly closer in terms of like semiconductors or edge computing. Certainly we are closer, and it can happen more quickly in terms of batteries as well, new materials and chemistries. That might take a bit longer. It's more difficult to adopt rather than to, but definitely I'm looking forward to something like that.
Thank you guys for joining. It was a pleasure having you. Thank you for the audience. And yeah, go ahead and enjoy the rest of the show.